Good morning, traders. This is Brad Matheny. Today is the 25th of June, almost near the end of June. Looking forward to the 4th of July weekend. Going to be nice and relaxing. We are enjoying a very mild summer out here in California. Yesterday was only in the 80s, 70s, and 80s out here. Not bad for June. July, August, September are normally our hottest months, but we'll deal with it. And so here we are looking at a big rally yesterday. This is a weekly chart of the SPY, continuing that push melt up higher on the news of the Iran Israeli ceasefire. And, really kind of batted the markets around a bit yesterday on our flat down pattern. Remember, we were looking at a flat down pattern yesterday which didn't really materialize. Excuse me. We're really kind of in a news driven cycle. So the cycle patterns may or may not play out. We didn't get the crush on Monday. We didn't get the flat down on Tuesday. We may not get the breakaway today and carryover. We will see. Kind of expecting, a bit of a pause today up near these upper levels when we had a breakaway yesterday. I'm pretty confident that the breakaway move yesterday, this is now daily. Whoops, I don't want that. Okay, how come that didn't rescale? Oddly, that didn't really rescale. So let me come back over here, rescale this. So you can see this big gapping breakaway yesterday on, fairly heavy volume, but weakening. So you can see the volume down here is trending downward. You get this chart rearranged and try to show you the volume. So you can see this volume down here is trending slightly downward, not really weak. I wouldn't call it weak like back over in this area, but we are getting this breakaway on diminished volume, which tends to, lead me to the conclusion that we might be looking at some kind of a lack of volume, really rally phase here. I would be curious to see how and if this plays out with this gapping pattern here. A potential black bar over here. Not saying it's going to happen, but a potential black bar like that would be try not to go that huge. Would be a very clear uh, topping pattern with called an evening star. You see, we have a decent morning star right down here. So hypothetically, this is a very clear type of a morning star pattern. Here's another little type of a morning star. And even though this isn't perfect, this is kind of an evening star pattern. An evening star pattern typically is white bars moving up, little doji forming, and a black bar over here with a pullback. You can see how this pulled back, stalled, and rallied. So at this point, this little gap move here, given where we're at, leads me to think that we might be seeing some sort of an evening star formation over here. We'll have to wait and see. So the pattern is a breakaway bar. We are up here near these upper highs. We're very close to the 614 area, 613 area as an ultimate high. We could very easily roll up into the ultimate high area. We are generally bullish, so I want you to be aware that, I've highlighted this. I'll make this as big as we can so you guys can see. I don't want any misinterpretation. Generally, guys, we are bullish. The market is trying to trend higher, okay? We're aware of that. We know of that. It has been bullish, as I mentioned to you yesterday in a comment. Even though I can't show you, my systems have been bullish from this level. So right over here on the 24th of April, my proprietary systems, which I cannot show you because of trading view restrictions, have been bullish on a daily chart. So we have been nonstop bullish all the way up, all the way up. Even though I am worried about a potential reversal pullback that could suddenly happen here, maybe after Q2 earnings get started, maybe a little before, I don't know exactly when. And I've been warning of a potential rollover as long as price stays below this 613, 614 level. That's what I've been trying to tell you, is that as long as we are in this range, there is a potential chance that we will roll back down into this area. I mean, that chance can happen at any time, even if we get up into this area, but it's more highly likely in this consolidation zone, this big, broad phasing pattern. And the way that works, as I've told you before, is you've seen the excess phase peak pattern play out, but you come back over here, we'll get rid of this, get rid of that, get rid of that, we'll leave those. You have a big, broad excess phase peak pattern playing up here, coming down to here, moving all the way up through this trendy channel right now. That big excess phase peak pattern, as long as we stay below this upper area, has a chance of reverting back down to, and I'm going to change the color of these, has a chance of reverting back to this downside lower zone down here. So we have literally, as long as we're in this pattern, the next logical phase is not necessarily invalidation. The next logical phase is this breakdown from here down into this low, moving, as I've shown you, into consolidation. So that would be the next logical phase. If it happens, I need you to expect it to happen. If it doesn't happen and pushes up, that would be what is called technical invalidation. This is how I use price theory. Price theory is essentially the concept that price dictates everything, and all we need to do is follow price. So understand that, yes, we are following price, and we are technically in a bullish trend because of two things here. Number one, as soon as we got above this high, which was really right here, this next bar, oops, right there, that got us up into this breakaway mode, intermediate upward trending. So from here on, we were pretty solid bullish trending from that point on up. We were basically in bullish trending because of price theory. And price theory is what I've been trying to teach you. Okay? Price theory is the theory that price tells us everything we need to know. Now, this is daily. I could have gone back down to hourly and found an earlier base or bottom, or at least more intermediate bases and bottoms through this rotation. But really, at this point, as soon as we cross this high right here, we moved into intermediate upward trending. That was it. We were in a bullish trend at that point. And it was going to continue to stay into a bullish trend until it took out this low down here at 509. So price theory teaches us everything, in my opinion. Okay, yes, there are some false triggers. Yes, there are some warnings. But ultimately, like I said, if you use the techniques that I teach you back over here in the mechanics of trading video, get rid of this. And you got to move way back here, guys, to look for my mechanics of trading video. But let's go take a look. It's going to be 41 pages or so of it, maybe more. Let's try 41. See where we're at. 2017. Okay. It's way back here. Like I said, I wish they had a search feature. Yep, those have been taken out because I didn't know what I was doing in TradingView. So back out here, they were basically about a year ago. So we'll get there 2022. There's some examples of the daily price patterns. When I started first showing you the daily price patterns, that was 3 years ago. And more of the price patterns, more examples. That was the spiral. That was a fun one. And then we should be getting close to it here. Simple method of evaluating trade setups. Yeah, we're getting close to them here. There we go. Mechanics of trading, part 13. Okay, so part 12. There we go. Mechanics of trading, mechanics of trading, mechanics of trading. Part 1. So that's basically look for May 31st, 2024. Last over a year ago. And the mechanics of trading and SPY Fibonacci price theory, as well as these 5-year expectations, greatest opportunity of your life. That's a great video for you. Wonder how many views that's had. 5,662. Lovely. But again, these are teaching you how Fibonacci price theory and price action should dominate everything that you do, in my opinion. Price is the ultimate indicator, guys. That's what I'm going to try to tell you. And that's what I'm here to try to teach you. So right now, price as the ultimate indicator is bullish. We are in an uptrend. We do have this potential setup of a rolling potential downtrend. You've been aware of it for many weeks and many months as we've been going up here. We are still in bullish trending. We are moving higher. We are up about 15 tenths of a percent in the S&P. Not a big breakaway bar. It seems as though we had that big breakaway bar yesterday and not that flat down bar. You know, I would be a little cautious of a roll back down here, potentially filling the gap. Just me. Okay. Want to see what the market's going to do in the morning. We don't have any big carryover trend. We're not seeing a big breakaway. You know, we are bullish. We are probably going to melt to the upside, but I would be very cautious of this gap. We've seen a couple of big gaps in this move higher. Got one big gap down here, another big gap right here, another big gap right here. Then we have another big gap right here. That's one. Let me count them again. 1, 2, possibly. This may or may not be a gap. I got to check. But definitely 1, 2, 3. 3 gaps to the upside typically is exhaustion. So at this point, we will see. That's based on Japanese candlesticks. We will see how this plays out. We're looking, like I said, today at a breakaway pattern in bullish trending. And then we move into our counter trend rally. Now, if we get any kind of a bleed over or let's call it kind of a forward shift of the patterns, and we move into this counter trend rally mode today, combined with a potential breakaway, again, I would be thinking that we would be looking at a downward cycle trend today. Maybe large, maybe not large, but I would be thinking that if we move into any type of a correctional move, we could see price down in the, let's call it the 597 to 600 area. So just FYI, a correctional reversion after this move could see the SPY drop 6-7 points pretty easily if we were to revert back down to this 597 600 area. If not, we're going to probably just meander our way upward. Okay, we are going to now go to gold and silver. Gold and silver had a pretty good recovery yesterday after this move here. We've seen some news over the last couple hours. It's hourly chart in silver and gold breaking down a bit. We're getting a bit of a rally here setting up right now. We'll see if it holds up. You know, we came off of these lows, these 3,300 lows roughly, and these 3,350 lows, got below it, rallied back up, pretty much got right back up to where we started, guys. And like I said, I think that gold and silver, my opinion is that gold and silver are going to continue to hedge this risk. So I'm really still looking for gold and silver to hedge the risk of any potential ongoing conflict in Iran. And I think that I think that Israel is doing an efficient job of trying to curtail the risks that are involved there. But it's a mess. That area of the world is rather a disaster right now, and I don't think, like I told you a couple of days ago, I think it's going to end within 30 to 60 days, but I don't think it's going to end the way we want. If the Iran political leadership continues to stay in place and continues to try to fight for nuclear weapons and or nuclear power, that's just not the solution that we want. We want, Iran to be to stop being a center of terrorism and to really, grow into the 21st century here. So again, we'll see how it plays out. But again, gold and silver moving into a momentum rally phase in counter trend. So what does counter trend mean? So counter trend, what I typically do here, guys, is I go to daily and I'll shrink this up, spread the daily chart out, and I'll tell you how I look at counter trend. So counter trend to me means what is the trend over the last 3, 5, 7, 10 bars? That's what I want to know. Okay, so I can see here the last 3 or 4 bars has been down, the last 5 bars has been down, the last like 7 bars has been sideways pretty much part, and for the last 10 bars have been sideways. So a rally in a counter trend mode. If I could draw this for you, you've got a down bar for 5 days roughly, a down bar for 3 days, a sideways trend roughly for 7 days, and a slightly downward trend for 10 days. So looking at that, what I do is I look at this general trend, which is pretty much to the downside, and I would view the counter trend move as an upward move. So when I come over here and I look at the momentum rally in a counter trend mode where we're bearish, explosive bearish, I would then look at a counter trend move, just like these are, as being against a bearish trend or counter to a bearish trend. So that means that I'm kind of looking for an upside move today in metals. We'll see if it plays out, but and again, there's been a lot of news, so we could end up having all kinds of crazy data. But I would be looking for really some kind of a upward move here. Same thing over here in silver, like I'm showing you. Go back to 1 hour here, and you can see we're getting a pretty good little move. Doesn't look like it, but it's a pretty good little move here. $7, $8. And really, in my opinion, oops, come over here, get rid of these, show you. Gold really kind of wants to get back up into this 3,400 area. I think, like I said, this range between 33 and roughly 3,400, that's acting as a very clear level of support for gold. Over here in silver, I can tell you that it's basically between this 35.50 and coming up here to about 36.50. It's acting as a very clear, broad level of support. You can see going all the way back to here and going all the way back over here. We've got a very clear range here of consolidation trending. And I think, like I said, as long as we build a support level, this is hourly, and we continue to build this support level here, which again, we can go back over here and find more examples of very clear support. across this 3,300 level and across this 3,400 level. I think as long as we consolidate within this range, I think we're building a base for a bigger, broader move to the upside. That's my personal opinion. Again, I don't know if you guys are aware of or seen any of my gold videos, but go back through some of my videos and watch how powerful of a move metals could be making over the next 5-6 years. It's absolutely incredible to think that, in my opinion, if you think this is the top for gold, good luck. Wait until you see the next couple of big moves. If you follow my research, you'll know that we're in the expansion phase here. An expansion phase has a ways to go, potentially up to like 7,500, but I'm thinking more 52, 5,500 for gold. And then after we leave the expansion phase, we enter into a brand new phase that lasts another 2.5, 3.5, 4.5 years, which could more than double the price of gold. So get ready. Could be very exciting. Okay, we come back over here. We go to Bitcoin 107. Yep, look at this. Big rally. Moving back up into my, what did I call it? 106, 450, which is really 106 to 107 up here I talked about yesterday. So we'll just come in here. And that's pretty much right up in this area. So we're moving right up into that range, guys. Right up into that topping pattern. Still in this kind of downward channel. Again, getting a big bounce reversion here after all of that unwinding and selling. Me personally, I am watching this channel. I'm watching this rollover. We're in a clear downtrend. I showed you yesterday lower low, lower high, lower low, lower high potentially. We have broken above this resistance channel. So technically, we're intermediate term bullish right now off of these lows. This is again daily. We could do that on any interval. That's why I'm trying to teach you. You can do all of this analysis down on 1 minute or 2 minute or 10 second if you want. The same type of analysis that I'm teaching you to do here, you can do it on any interval. The reason I'm focusing on daily is it's just easier. Okay. What I'm going to show you right now is going to last maybe 10, 15, 20 days, where if I do it on a 2 minute chart, it's going to last only about 10 minutes. And then you're going to be wanting to know what comes next. So remember, all of this analysis is teaching you to use your skills to become a better trader and to use hopefully some of my tools as well. Okay, so now where we're at with this, we're up here near this resistance area. We have moved into a technically bullish trend up near this upper channel. I would be very cautious of a potential rolling trend here moving into the 4th of July weekend. Remember, 4th of July weekend or 4th of July week is really next week. So I haven't looked at the news yet, don't know what's going on, but I would be very cautious of this channeling mode right now, potentially reaching a peak here and rolling downward. We do need to get above this. We do need to get above this 110 level to see if we can push any higher. We are in intermediate bullish trending right now in Bitcoin, but like I said, price channeled is telling us that we could be nearing a top. All right, so we're back over here. Go back to my chart, let you guys do what you got to do this morning. I'm going to work on my first cup of coffee and get back to work on my other data, my other projects, which I've been working on a book for about 4 or 5 months. I'm trying to do, well, I can show it to you, but let me come over here. So, where we're at with this, I've been doing this on weekly. This is what I call the Tesla 369 theory. Okay. And what you're looking at is a mechanical breakdown of price activity based on Tesla's 369 theory. And I have been documenting multiple images with data showing you how this works, how the concept works, where we look for breakdowns, how the resets, how the cycle phases work. And I've been basically moving through these charts showing you how these breakdowns and setups work. This is another technique that I use visually and with my followers, my subscribers, to try to show you what's going on in the market. And we're typically looking for, breakdowns and exhaustions, typically around 3 or failed 4s. This says a failed 5. This is really a failed 4. So right here we have the last completed bar being a 3, would indicate that we have replicated a 3 of the Tesla 369 up here, failed and rolled downward. We had a very sufficient breakdown. We were below this channel low here. Get my mouse to cooperate. Got below that level, but did not get below the 50% of the previous completed block level. So what that tells us again, folks, is that we're looking at a soft reset. This is what I would call a soft reset, okay? Indicating that we're either going to get another move down here. So we're in the breakdown mode. Let me grab this and that and come over here and show you that we're either going to get another breakdown, which at this point lines up perfectly with this 50% level, or we're going to reverse and form a new upward cycle trend breaking out. Because we were at the 3 before, we will likely move into another 3 or 6 mode out here to begin with. If we get the pullback like we saw here, A, B, C, if we get that, then we would be looking at another one of these in this area, kind of like that, pulling down into an A, B, C, or 1, 2, 3 breakdown, then bottoming, then rolling upward. So understand that where are we now? We're at a failed 4. We're initiating the first impulse wave of a breakdown. Wave 1, that's what this number 1 is right up here. We failed above the 50% level, which is down here. So this is a soft reset, very similar to what happened up here. Failed above the 50% level. And what we're looking at is we're looking at a potential staging breakdown. We would essentially be for this to move through a cycle, a proper cycle, we'd be looking for a 1, 2, 3 type of a cycle trend downward. This is a longer video, I'm sorry. But again, this is part of the reason why I'm warning you that here on the Dow Jones, unlike the S&P and the Nasdaq, we are still in this consolidation breakdown phase. We have our impulse range already. We've got our failure at 4, which is really a failure at the last completed bar of a 3. So we've completed a 3 upside. We've got a soft reset, which means we could move into a 369 somewhere over here, but only until we complete potentially this reset. We have to get above this level, which I keep telling you guys, we have to get above this level here to move back into bullish trending, or we've got to get down below, like I said, this level here to move into the next block downward. The next block downward would be based on these highs, actually a little higher than this. Would be about there. So just off of that low. I mean, literally just off of that low. It doesn't look like I grabbed that. And that's part of the fun thing about trying to write a book. I spent a lot of time going through this chart. I mean, you can see how far back I've gone, all the way back to 2009, actually 2000. So I've got a lot of data out here, but it's what you got to do if you're going to put the effort and energy into trying to teach people. So again, look at this screen capture. You won't understand it, I bet, at first. You might be able to figure it out, but how price blocks, these are called price blocks. I call them price blocks or phase blocks, but how price phases and how price fails, whether it is a deep retracement or not a deep retracement, which I call dominant or not dominant, then we can determine what's likely to come. Because this is a non-dominant trend right now, we're looking at a 369 to happen. If we were to get a dominant trend back down below this blue line here, which could happen on extension, then this would become a dominant pullback. This would become our indicator that we move into bearish trending right here. So I'll put a little arrow. Oh no, go the other way. There we go. So basically, we get below this level and we become dominant bearish trending. That's below this blue level right there. Okay. Until then, we're in a pullback. It's just a moderate, non-dominant pullback. Okay, guys, I'm going to let you go. 31 minutes. Sorry it took so long. Remember, I'm trying to help you guys. And at the end of this month, what I'm going to do is I'm going to change the way things are done. I've been doing this for, 15, 16 months now. I love the fact that you guys are following and getting a lot out of this. But, I've had a number of wonderful little comments from people. And yeah, I'm not perfect. I don't nail the markets every day. I'm not trying to tell you what to do intraday. Like I told you, I have tools that help my followers do that. And one of the tools, like I showed you already, is this one, which has been bullish on a daily basis. It's called the Mint Fib Pressure Exhaustion System, but it's been bullish the market since April 24th. So, you ask me, Brad, why are you talking about all these pullbacks? It's because I'm trying to warn you of the potential breakdown that, like I said, is still valid until we get up comfortably up above these upper thresholds, really get into real solid bullish trending, which I just showed you back over here. I mean, this is, if you know anything about price theory, and you look at what I just showed you here, this is telling you very cleanly that we have a very good chance right now with this high up here of moving down into another leg, potentially pulling back and moving down into another leg. We are not out of the woods yet here, guys. And that's what I'm trying to tell you guys over here on the SPY. It looks like a great rally. It looks like a fantastic rally, the NASDAQ as well. But I'm going to tell you that, the market itself is very strained right now, seeking direction. Even though we've been bullish, caught a lot of this run to the upside, still bullish, I'm telling you that the markets seem to be very strained. And I think the second half of this year could get even worse. So we shall see. Okay, guys, that's it for now. Talk to you later.